Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. I talked uh, about this idea, or a version of this idea, last week. Today, just another good opportunity, I think, to kind of go over like a point I really want to make about breakouts in the current market or breakdowns. We're going to have probably a good combination of breakouts and breakdowns over the next couple of months as volatility remains high. Um, but what I really want to try to drive home is that uh, you need to uh, gauge where the conviction is, right? Where the volume is, where the participation is, right? And right now, what we're seeing is that you're just not getting the increased participation on some of like these leading stocks on breakouts. Um, if they're possible, beneficiaries of this coronavirus related quarantine, it's a different story. But just regular stocks that are just either momentum names or high retail interest names. We're just really not seeing that really great participation on breakouts, right? And it's a good sign of the conviction level when the breakouts aren't following through, when you see repeated failures at key levels, the volume is not really accelerating. To me, like, it's a warning sign, right? Like, these aren't the type of patterns you want to be chasing when like these breakouts are developing, right? To me, it's saying that risk on mentality might not be there yet, or it just might not be there in general, right? Um, so just a few examples just to kind of highlight what I mean. AMD, right? Really clean pattern, right? 50-day, really clean area of resistance, right? And last week got up to it, tried a couple times and failed, right? And then it rolled back down. And now this week again, I mean, it popped to it yesterday, failed. Today, actually gapped through it and has been spinning around and failing, right? And what you'll notice is down here, the volume profile, it's really not been any higher than it has for most of March. So you have like a real leading name, right? AMD is like one of like those leading chip stocks, and the volume participation is just not good on the breakout, right? So it's not like signaling like that risk on mentality when you want to pile into these things when they're working on a breakout or they're working on maybe like a month long high, right? And you can almost use like this indicator on the opposite side, right? So like when the stock was hanging out down around its 200-day, right? It seemed like it was flirting with the possibility of potentially breaking down. But again, I mean, it tried to roll over, hit the 200-day, didn't work, bounced, right? Again, 200-day, tried to break down, and it bounced. So you can see like the volume, it really never accelerated. It didn't confirm participation. So, um, you know, while now it's the volume, participation, the lack of follow through is signaling that more cautious on the long side. At the same time, we're signaling to be a little bit more cautious on the downside in March, right? Another leading name like a Microsoft, right? It's kind of like a same idea. Like it's bumping up into like some of these really key moving average levels, right? Tried to power through it, failed last week, rolled over, tried to power through it again, uh, really hit it, stalled, gapped up, and failed today, right? And it's like the same idea. Like the volume is really not accelerating to the same degree that you would expect on like a material break on a leading momentum driven name, right? And if you want to use like the opposite end of the spectrum, right? Similar to AMD, like it looked like it was going to break down. It was a bear pattern, right? Like a bear flag underneath the 200. Looked like it was going to break down, stopped, bounced, again, stopped, bounced, right? And like the volume profile, even on like the day it broke down here, you can see that the volume profile really never signaled like the increased participation, right? So these are just two. I can name a couple other ones. We're seeing a lot of these leading, or they were leading names like in January, February, most of last year, right? And they're starting to show really good bullish patterns. Whether it's bear bull flag breakouts, breaking through moving averages, trying to get back into trends, right? But what you're not seeing is the volume, the participation, like the strong follow through that's really signaling risk on. So it's just, I still think it makes sense to be more cautious, and especially on these types of patterns, right? More interested in maybe like short term strategies, like a couple week strategies, right? And taking like the quick trades versus like looking at like longer term strategies at the moment, because like you're just not seeing like that risk on indications right now in these stocks. All right. Um, so I just really wanted to go over that again because as we've had like a really great week, you're starting to see this pop up more and more with like some of like these bullish breakouts on whether it's consolidations through moving averages, and I still think until like the volume profiles and like the like the follow throughs really indicate that the risk on is coming back and these things are ready to run, I still think it warrants being cautious. All right. Um, so if you like these videos and you're looking for more information on options education or more option trade ideas, please follow up with the link in the description of the video for more information on options in play. Stay safe, stay healthy. We're going to get through this together. All right. Have a great night, and I will talk to you all tomorrow.